A bit of a focus on the construction sector with that Basil Reid update, with the headline earnings per share expected to be 25 to 35% lower than the year before. The company in trouble?
I think not in trouble per se. I think the two deals that they recently did with the acquisition of Panda Construction and TWP have just gone against them. You know, they bought them at, let's say, the top of the cycle at fairly lofty prices. And in Panda, for example, a number of contracts were lost. And TWP, given its focus on the mining industry, has just seen its order book contract. And as such, Basil Reid has been impacted, and earnings are going to be a great deal lower. And I forecast that many other construction companies going forward will have lower earnings for the next 6 to 12 months.
And what would you attribute to be the main factor behind that? Is it government spending or government problems within their spending structure? I
think we've seen many of the large construction companies, you know, pull out of the Middle East and come back to South Africa hoping for work. You know, there is a great deal of government spend. The question is, does government have money? The current answer seems to be no. Following the spend on Gauteng and the World Cup, where things had to be finished, there seems to be a bottleneck in the issuance of new tenders to the construction sector. After the last few days, seeing a number of construction companies, and they're all telling me that there simply isn't any work out there, and any work that is out there is being tendered at sharply reduced margins simply to keep their businesses going. And the other issue is that government is simply delaying payments. They have no money, and as such, payment is being staggered until they get funds coming in, and that is having a severe impact on particularly the mid-sized construction companies.
Let's just move on to Iliad, which is a building material supplier. Also a drop in HEPS for them, also highlighting again the tough trading environment. Just take us through your thoughts on those results.
Yes, the Iliad numbers were slightly worse than we were looking for. Once again, it just indicates that the residential market, which they primarily service, people upgrading their bathrooms, their kitchens and their general household, continues to be quite tight. They tend to operate in the middle to the upper end of the market, which you would think would be more resilient. The Iliad numbers are telling you that that end of the market is still being fairly constrained by high debt levels and the underlying weakness in the economy. So the Iliad results were poor, and we don't expect any pickup in that market for at least 6 to 9 months.
What about the stores? When we were speaking to the CEO the other day, he was saying that they have shut one of its shops in Mpumalanga. They're planning to close another one, but then they're opening another one in KwaZulu-Natal. What do you make of this? Are we going to see more shop closures? I
think the key thing with Iliad is, they have a fairly high dominance in Gauteng. Certain parts of the country are doing better than others. Natal remains a little bit more resilient than Gauteng, for example. The Western Cape remains very weak. So I think Iliad is just repositioning its footprint to cope with the changing dynamics in the marketplace and going to the provinces where activity is actually happening.
So overall, I mean, in the construction sector, would you say which sectors would you say are under the most pressure? Which regions, rather, are under the most pressure overall?
Well, generally, again, the two largest provinces, being Gauteng and Western Cape, have been in the doldrums for quite some time. The Western Cape has been flat for at least 2 years, and nothing new on the horizon coming there. We are all waiting for the upgrade of the N1 and N2 highways, which will be a multi-billion rand long-term contract. In Gauteng, things have ground to a halt following the World Cup. The only activity is in the road building operation, and I think that's progressing because they want to toll us to get more money coming in. So work has started quite quickly. I think general construction in this country remains quite weak. Margins are under pressure. It's a cutthroat business, and I don't foresee any upturn in that sector till at least the latter part of 2011, maybe the early part of 2012, so be cautious.
Anthony, so looking at that, are we going to see a lot of construction companies vying for that road business, and could we see a lot of consolidation then in the industry?
I think currently, again, the information that I'm getting from my underlying corporates is that the tendering process within roads has become fiendishly competitive. In the good old days, there was so much work internationally that many of the big boys didn't need to work locally. The roads business was left to a handful of companies. Now I'm told there are multiple tenders going in for any government work, particularly in roads, because Sandral has actually raised money via bonds to pay for roads, so there is money there. But margins are steadily creeping downwards. It's becoming much, much tighter to get tenders out at decent margins. I think sector consolidation actually has to happen. I think with the lack of government work and the fact that payment is taking a great deal longer, many companies are finding it quite difficult currently, given their stretched financial state. And I would hope in the next 6 to 12 months that some savvy financiers out there would start bundling the sector together so we have stronger companies going forward.
So then which companies are you seeing value in at this stage?
I think in construction as a whole, I don't see much value at all. At the end of the day, I think at best I'd be holding certain counters. I think following the Avenge, Marine Roberts and recently Basel Re trading updates, I've foreseen many other companies issuing poor trading updates, and that will impact on the sector and as such drive stocks lower. So I don't think there's any hurry for investors to actually look at the sector, again, for at least 6 months.